The stock market's been absolutely crazy the last couple weeks. 2 weeks ago, Jerome Powell pulled the rug on the stock market and it's been going down ever since. Yesterday, which was Friday, the market did a serious bounce back. So that is showing you right here in my portfolio. I bounced back almost $34,000 in one day. So the purpose of this video, I'm going to show you everything that I'm personally going to do to capitalize on the market if it goes up and how to make money on the downside too. That is the key with investing. You have to be able to survive in a bull market and a bear market. You don't want to get wiped out. So we're going to go into this account right here in just a minute. I'm going to show you every single play that I have open, all my trades that I have, all my option plays that I have, and I'm going to walk you through how it works and how I generate over $30,000 per month with stock options. And then we're going to talk about a couple plays that I plan to make next week that could really make a big difference in your portfolio. So let's dive right in. I just want to hit this tweet super quick. I started out with nothing. I had nothing. I knew nothing. But now I have millions of dollars. I scaled my portfolio from $0 to over $2.2 million in just about 6 years. So the sky isn't the limit. You are the limit. You have to take control of your financial future. You have to understand how to invest in the stock market the right way. All right, so let's head over to my trading account. We're going to break everything down going on in there. We're going to walk through all my trades, all my returns, profit, loss, all that stuff. So here we go. All right, so let's take it from the top. So the total account value is $885,000. The total Schwab account is like $950, like I just showed you earlier. The reason why this is lower is because I have a couple Schwab accounts. So the total of all my Schwab accounts is over $950, but this account alone is $885. Total gain loss, that's what I made today in this account. And the total gain loss of the entire account is $407,000. So here's the thing about cost basis. I just want to say this super quick because I know everyone's going to say, oh, you have $885,000, but you sent $485,000 to this account. Totally incorrect. And the easiest way to explain this is just by doing an example. Let's just say I send $1,000 to this Charles Schwab account and somehow I'm able to convert $1,000 into $485,000 on some crazy play that I made. Great. I turned 1,000 into 485. I sold that play. Now I have $485,000 in cash in this account. When I go buy shares of Triple Q, Tesla, VO, or really do any options plays, that is going to be my cost basis. My cost basis is going to show as $485,000. So this is not showing you how much money I sent to Schwab. This is just showing you kind of like how much money I realized so far in Charles Schwab and then reinvested that money. Because there's so many plays over the year that I made and then I sold at a profit and then I do another play and then I buy another stock and I do this and I do that. So all that stuff gets added up into the cost basis. So keep that in mind. The total cost basis of my entire Schwab account is roughly $90,000. It's over $950,000 right now. So over a 10x. I started that account roughly 6 years ago. So super solid return for 6 years of pretty much 11x. All right, so let's dive in. We'll go through every trade that I have. There's a few more on the bottom here, but let's go through one by one. So Triple Q, these are shares that I own straight up. I have 802 shares of Triple Q in my Charles Schwab account. Market value 415, gain loss 150K. And this is my cost basis per share. Now keep in mind, this is only my Schwab account. I have other brokers. My total net worth is roughly like $2.2 million. I have this account, other brokers, and a handful of rental properties. So keep in mind, this is really just the only account that I show you guys. And over here, always reinvest your dividends. Of course, you guys know how I feel about dividends. Like if I'm going to get them, I'm going to reinvest them. But I do not invest for dividends. Now Tesla, that's an interesting one. My cost basis on Tesla is $149 per share. Currently trading over $412. I'm up $130,000 on the Tesla play that I have open right now. That is just me strictly having 500 shares. Now, here's the benefit of owning these Tesla shares. I have been selling cover calls on Tesla, 5 contracts, because every contract is 100 shares. So 100 shares times 5 contracts, that equals 500 shares. So if I sell 5 call contracts on Tesla, those will be covered because I own 500 shares outright. Now, for the last few months, like I just said, I feel like Tesla is overvalued, but I don't necessarily want to sell my shares. So this is a good opportunity to sell calls and generate a little bit of cash flow. So for the last few months, I've been generating roughly like $1,000 to $1,500 per week by selling calls on Tesla. Now, when you do that over time, and this is just one of the plays that I do, that really starts to add up. That is lowering my cost basis. I would say in the last maybe like month or so, I've probably generated like $10,000 in cover call premiums that I sold on Tesla. And guess what? Now my cost basis is effectively $64,000. It's not going to show that right here, but in theory it really is. So keep that in mind. Like, I like to sell calls on Tesla right now, and Tesla did just pump back, and all the calls that I did sell, and you could see this in Discord in real time, I closed out all those call contracts before the pump back today because I felt like Tesla fell so much it was due for a rebound, and that's what happened. I talk about that in my course, the rubber band analogy, how the more things fall of quality companies when you let it go, it wants to ping back up, and the higher they pump, the quicker they pump, you ping it once it go back down. So when Tesla was stretched up super high, I felt like a correction was going to come, so that's why I was selling covered calls going up. I never really went in the money when I sold those covered calls, and then when it fell, all the covered call contracts pretty much expired worthless. I collect the whole premium right there. So let's go down a little bit more. So VOO right here, I have a total of 609 shares. Total cost basis is $425 per share, currently $544. So not looking bad on that. I usually like to have the base of my portfolio. So in Schwab, I consider this to be the base of my portfolio. I like to have 40% triple Q, 40% VOO, and 20% in individual stocks. So Tesla is a little bit overweight. This is a little bit underweight. But over time, this will get probably balanced to be the 40-40-20 ratio. There'll be other things that I add in here. This is just at the time of recording this video. This is what I have open. These right here are some Tesla puts that I sold a few months ago. I sold them for $30,813. My profit is $28K, and I can buy them back for $2,000 right now. So this is pretty much the bread and butter of how I make money in my investment portfolio and how I scale so fast. I sell puts on companies when I feel like they're trading below intrinsic value, when they're beat down in price, and when they have a durable competitive advantage going forward. So when I sold these puts here on Tesla, the price of Tesla was somewhere around $180 per share. I sold it for $30K. I could buy it back for $2,000 right now. So my profit right now on paper is $28,000 on that play. Now here's the key, and this is how I scale so fast. People are going to say, well, how do you secure these plays? What do you do in Schwab where you don't have to have cash in your account? So technically, look right here. You can see my cash balance in Schwab is actually negative $7,000 right now. That is just a rounding error that I did. So in order to clear that out, I'll basically just go sell a few $1,000 worth of either Tesla, VOO, or Triple Q to get even on this balance right here. So technically speaking, yes, I am on margin for $7,000 right now, but that's just a rounding error for the trades that I do on a daily basis. It's not a big deal. I'll just sell a few shares and it's done. Now, how do I secure this play? How do I sell these puts essentially with having no cash in my account? Look over here on the right-hand side. Do you see this margin requirement, $36,040 on this play? So what this is saying is, and people that have Robinhood, you're probably going to be mind-boggled on this, but what this is saying is Charles Schwab is requiring me to have $36,000 of equity in my account, whether that's cash or shares. Cash is cash, and shares could be converted to cash. So these shares that I have right here, market value of 415, 205, and 332, this right here equals roughly $885,000. So here's the key. I only sell puts on companies, like I just said, trading below intrinsic value. I want to hold them for the long run. I would be okay to own them at the strike price. So if I have to get assigned these shares of Tesla, for example, I'm going to have to come up with $170,000. Now keep in mind, I sold them for roughly $30,000 this option play right here. So I received $30 per share in premium. So my effective cost basis would be taking assignment of Tesla for $140 per share. Do you want to buy Tesla for $140 a share right now? I know that I would love to do that. So that is what happens when I sell puts. People are going to say, but Brandon, when you sell puts, it seems like they're always way out of the money. And guess what? That's usually what happens because I sell it on companies that are trading below intrinsic value, that are beat down in price, where I am expecting a rebound to come. Basically, companies that are just out of favor that I like to hold for the long run, I do it on, and ETFs too. And keep in mind right now, I feel like the market's a little bit overvalued, so I'm not out here shooting a bunch of trades out there because if the market goes down, I don't want to get in trouble. So just to be super clear too, I have the capital to take assignment of every single options play that I sell right here if they all happen to go in the money. Now keep in mind, if they all go into the money, god dang, like could you imagine buying Tesla for $140 a share? Could you imagine buying Triple Q right here for $349 per share and then go $12 below that for the cost basis and doing that for $620 in 2025? God, I would love to do that. That's a great deal. This is what happens when you do options the right way. You're going to come to find that most of the options that you sell are going to expire out of the money. And then when I sell this one, like Tesla, for example, right here, I sold this for $30,000. I get this credit applied to my account immediately. So if I were to sell another one right now and it was $30,000 in premium, I get $30,000 and it pops up right here in my cash balance immediately. And then I go buy more shares of Triple Q and VOO in the base of my portfolio, or individual stocks if I have a good margin of safety on the play. That's what I do in a nutshell. This is a very broad overview of what I do, but I just want to spur your brain to show you this is how I scaled so fast. And this is going to work in a bull market or a bear market. Just go over here and plug in my margin of safety. Go and divide out $520 per share on Triple Q, and then do it divided by 349 minus the $12 per share, so $12 less than this. That is a pretty solid margin of safety, and even if Triple Q were to fall that far, why on earth would I not want to take assignment of those shares at an ultra discounted level? Of course I would want to take assignment because there's a good chance they're going to go back up soon after that point right there. And one more thing on margin requirement, then I'll just show you the rest of the trades here super quick. So margin requirement, this fluctuates in real time throughout the day. So if Tesla were to fall, this margin requirement is going to go up. So think of margin requirement on Schwab as a function of the percent chance a contract is going to expire in the money, and if it goes into the money, how deep in the money is it going to go? So the more deep it goes into the money, the more the margin requirement is going to be, and the farther out of the money it's going to be, the less the margin requirement is going to be. In a nutshell, that's how that works. I go into ultra deep detail into all this stuff in my course. It's not possible for me to explain this to you in a 20-minute YouTube video. The course is roughly 6 to 7 hours of video content, and I comb through step by step everything you got to know in the stock market. But let's go through, let's look at the rest of the trades that I have open, and this is it right here. So that is the bottom. Total profit right now, $407,000 of unrealized capital gains. These are all the plays I have open currently. And keep in mind, I change this stuff around usually all the time. I send out all my trade alerts in Discord. But if you want to get in my premium Discord, you have to be a course member. So check out my course below. It's 60% off right now. It's never going to be this cheap again. And then you could get in a premium Discord. You can see all my plays, ask me all the questions you might have. And if you guys want to see all the trials and tribulations and all the things I went through to scale from $0 to over $2 million right now by age 30 in a conservative way, watch this YouTube video right here. Don't forget about my course below. I'll see you guys in the next one.